What if you had a simple trading strategy that's easy to follow and compounds your money over time? A strategy that takes no decision making or guessing. How could that change your life? Welcome back. My name's Mike, and my goal is to help you achieve financial freedom through trading. If you like the video, please long the like button and let me know what you think in the comments. It's free and it really helps the channel. And if you want to see more videos as they come out, subscribe and tick the bell. All right, now let's look at the strategy. So this strategy is composed entirely of EMAs. You have the 200 EMA, the 50 EMA, and the 20 EMA. For a long condition, we want the price to pull back into the 20 EMA and then close above. Also, the price has to be above the 200 EMA. The 20 EMA needs to be above the 50 EMA, and the 50 EMA has to be above the 200 EMA. So you want all the EMAs in order, 20, 50, 200, and the price has to be above them all, pull back into it, and then into the 20 EMA, and then close above. And you enter on the candle close. So in this example, the price pulled back into the 20 EMA and then closed above. However, the 50 EMA is not above the 200 EMA, so this is not a valid entry. Here is a valid entry. You can see the price pulls back into the 20 EMA and then closes above on the same candle. So you would actually enter here. The 50 EMA is above the 200 EMA, and price is above all three. Now for your stop loss and take profit, you place your stop loss below the most recent swing low. Sometimes that's easier to find than others. Sometimes it's the very same candle depending on how long the wick is. It's kind of a little bit subjective, but here I would just put it below the lowest wick in this swing low here, this consolidation area. And then your take profit is just 2 times your risk. So you can see here, this one was actually a pretty quick winner. You get another trade signal very shortly after because all the conditions are still met. Price pulled back into the 20 EMA and closed above. And I would use the same stop loss placement in this one, targeting 2 times the risk. And you can see that was another winner. And then here, another valid entry. So you would take the long on the candle close, same stop loss placement for this one. And then you would target 2 times the risk and another winner. That's the basic idea. Once again, you need your EMAs all in order, 20, 50, 100. Price has to be above the 20, pull back into it and close above. All right, now let's get into some short examples. So you can see here the EMAs start crossing bearish. However, you don't have your first entry signal until right about here. For the short conditions, it's basically the exact opposite of your long conditions. The 50 has to be below the 200. The 20 has to be below the 50. And price has to be below the 20, pull back into it, and close below. So you would take your short position, just like on the long, you take it at the candle close, and then put your stop loss above a relative swing or consolidation area. In this case, I would probably target this wick right here, because I don't want to target all the way up here, because that's just too far of a stop loss. And then once again, you just target 2 times the risk, and you can see this was another winner. Here, you don't have another short signal until right here when you close below the 20 EMA again. So you take it at the candle close. I would put my stop right above the swing and then target 2 times the risk. And you can see this one actually got stopped out. So then the next trade would be right here. Same story, take it at the candle close, put the stop right above the relative swing, target 2 times the risk, and you can see that one was a winner. So that about sums it up for the strategy. Now I'm going to go through the painstaking process of using the bar replay feature and testing 100 trades on BTC USD on the 4-hour chart and recording the results. See you in a bit. And there you have it. After 100 trades, this strategy resulted in 116.5% gain on the account using 2% risk on every trade. The win rate was 47%. The most losses in a row was 7, and the most wins in a row was 4. The total time to complete 100 trades on Bitcoin on the 4-hour chart was 925 days, so a little bit long. But what's really interesting to me is that the performance was exactly the same as the Ichimoku Tenkan balance strategy we covered in the last video, which is a very similar strategy in a lot of ways. The one key difference here is that we were testing on the 4-hour. So usually on the higher time frames, your accuracy tends to go up a bit. In this case, probably if I were to use the 4-hour time frame to test the Ichimoku strategy, it would result in a higher win rate. But that's besides the point. Some additional things to note. When I was testing this, I noticed some really basic things that I potentially could add to increase the win rate. Maybe adding RSI divergence confirmations. If you don't know what that is, I will cover it in a later video. Another thing I considered is not entering on a pullback from an engulfing candle, because those typically you see follow through when you have a really large candle like that. So that would be a pretty simple one, a pretty simple filter to add yourself. And then the last thing, or only entering when the EMAs are diverging from each other. So when they're approaching each other, like they're going to cross, I would avoid entering on those possibly. Just additional things to keep in mind. Just like with all these strategies, these are just basic ideas for us to test and expand upon when we find something that works really well. So keep that in mind. If you want to trade on my preferred exchange for longing and shorting a wide variety of cryptocurrencies, consider using the link in the description for BITGET. You can get up to a $4,000 deposit bonus for free for using my link. And it's licensed in the United States and requires no VPN to use as a United States citizen. So for me, that's huge. And with that, I hope you enjoyed the strategy, and I'll see you next time.